Fellow YouTubers. I'm going to make a video here on the dividends that I received for this year, the projections of what my dividends will be next year when I reinvest them all, and some of my dividend goals. It's December and end of December, and I'm walking in the middle of the day, t-shirt and shorts on a nice trail. Can't beat Texas weather sometimes, right? All right, guys. In that initial video that I made that in the end of December, but it's early January. I decided to do a video on Vanguard showing no commissions first because I came out immediately and I happen to have time on my nice little teacher 2-week vacation here. But I'm going to go over last year's dividends and my contributions and what that looks forward to in the future. So I was able to max out my Roth IRA last year. Make it bigger here. So I put $6,000 in a Roth IRA. Let's just assume we get 5% in dividends. If you do 5% in dividends, 6,000 times 5% is $300. That would be the additional amount of dividends I would get a year. Okay, that ends up being $25 a month. Just do 300 divided by 12 months. $25 is coming into my pocket every month, and that's just a little buddy that's helping my investing. It's just going to be reinvesting, going back into these companies and the ETFs that I own, and ideally growing over time as well. If I put that 25 a month in and take 5% of that, you end up getting 10 cents a month in the additional reinvestment growth. Now, I do this little numbers quite a bit because I want to show the snowball effect that you get once you reinvest over and over, time to time. So by adding this 25 a month, you get 10 cents a month. The way I did that is you take your 25, times that by 5%, divide that by 12 months, get about 10 cents. Now, 5% dividends might be a bit high. I was fiddling around with these numbers about what might be the ideal percent, and 5% is probably a little higher than what my average portfolio is. It's probably closer to 4%. I have quite a few on small cap value and internationals that are less than 5%. Some in REITs and some in covered calls that are a little higher than 5%. The average is probably closer to 4%, but just to make the numbers simple and just to keep me and hopefully most of you guys motivated, I wanted to show these numbers of what small contributions could do over time. So I do have a decent amount of my Roth IRA, which many of you guys might have more, might have less, or might be starting out. I just want you to realize, just by starting out, if you could put your 500 every month, that's 6,000 a year, you put it into dividend growth companies, you'll get $300 passive income, not doing anything. And that will grow over time as well. So just want to motivate you guys to just start, grow it, keep it going, right? This is all of the accounts that I have and the current amount of shares I have multiplied by the dividends that they paid last year. So I'm trying to figure out the total amount of money that I'll be getting next year if the dividends stay exactly the way they are, times the number of shares I get. So the easy way to figure out how much money you'll make in dividends is you multiply the number of shares. Let's say I have 100 shares of a company, and you multiply it by the amount of money that they give per year. Let's say it's a $100 stock and it gives you 3% dividends. It'll be $3 a year. If you have 100 shares, it's not $300. It'll be $3, right? So because it'll be times 0.03. Okay? $30. So again, you multiply the number of your shares that you own by the annual dividend payment, and I'll give you the amount of money that you'll get. So I did that for all of my companies. It took me a little time to figure this out. I had to figure out the number of shares first. That's pretty straightforward. You just go to your brokerage, you look at how many shares you own, and then you look up the annual dividends. This is a little bit trickier. One way to do it is to type in the name of your stock or ETF and then type in the word dividend. So for instance, VEA dividend. NASDAQ.com is a pretty quick way to show what dividend payments they are. So VEA is an international developed markets dividend, and you have the different share amounts per quarter. If it's quarterly, you just take the amount of shares and multiply it by 4, and that'll tell you or just add them up, and that'll tell you the yearly dividend, right? So anyway, I calculated out all of the annual dividends for all my companies, multiplied by the number of shares that I have, and this should show me how much my dividend income will be next year. So I'm going to get 207.08 in VEA. SLYV is monthly dividend payer that is low volatility with pretty high dividend yields. Pays $1.09 per year, 240.3 shares right now. They'll pay me $267.92 in dividends for the year. DLS is an international small cap dividend growth companies, $239 a share. I have 100.9 shares. That'll be $241.15 total a year. VNQ is U.S. REITs. Those are real estate investment trusts. They own real estate and they loan out or rent out properties. $314 a share, 27.28 shares. That'll be $85.66 a year. KBWI is similar to VNQ. It's just small cap REITs. So they're smaller companies that are paying pretty bit higher dividend yields. This pays $177 per share. It looks less than VNQ, but it actually is a higher yield because the share price is lower for the ETFs. I have 112.74 shares. It's almost $200. Main Street Capital is my only non-ETF. It is a business development corporation, so they loan out money to other companies. They might get equity into the company, similar to Shark Tank and whatnot. Or if it's a bigger company, they might just loan at pretty high rates to help them out. $290 a share. $147.81 is $427 a year. SPHD, these are small cap value companies that I did previous videos on how these might grow bigger over time. Small cap has been lagging quite a bit compared to other companies, so that's why I decided to overload on this a bit. $1.79 a share, 142 shares, $255.09. This is my biggest holding. It's about 30% of my portfolio. RYLD is a tricky one because RYLD is a covered call ETF. I'm going to do RYLD dividend. Every month, the dividend on this company fluctuates quite a bit. Some months are pretty good. Some months are not so good. The average is about 7-8%. Not available. Not many people are aware of this company. It doesn't have much people buying it. You actually have to go to their actual company to notice it. What I did here is I took the last 7 months of the total dividends, I added them up, and then I divided by 12 to get an approximate yearly dividend. It's about $2.46 a share. I own 247 shares. What's unfortunate about RYLD is I have to reinvest these into these shares, but this is the one company that Vanguard does not automatically reinvest because it's covered call income. It's essentially options that are being sold that comes in as income. For that, I have to manually reinvest these. But if I did that, I would get $607.70 a year. Add up all those numbers, $2285.93 a year. Divide that by 12. I'm getting $190.49 per month, and that is passive income. I literally don't have to do a thing with it, and most likely this year I'm not going to do much with it because we're going to try to pay for my wife's college and not get any debt. So we're going to keep debt free. So whatever extra we could put in, we're going to add to these. However, most likely we're going to keep it very close to what it is. I'm going to be getting $190.49 by simply sleeping well at night, Swan ETFs, and not really having to do anything. And they're automatically going to be put back into these companies to reinvest as well. Okay. What's good about all these is most of these ETFs will grow their dividends over time. So I don't know the exact amount this will be in terms of how much my income will be. It will likely be a little bit higher than this. So it might be closer to $200 a month when you look at increases in dividends. Let's say I take the $190.49 a month and I reinvest that at 4%. I'm going to get $91.90 per year. That's taking this amount, putting it back into the funds, and I'm going to say 4%, a little bit more conservative rate. That'll be $91.90 a year in addition, just from leaving this money reinvesting. or $7.66 a month. Literally, I could just hang out the rest of the year, don't do a thing. I'm going to be getting $190 a month for this. If I put that back into the shares, but again, just leaving it, letting it go, it's going to grow $7.66 a month. That is the beauty of passive income. It takes a while to do this. It's not going to be immediately. It took many years to get to this big portfolio. But this is hopefully a good encouragement for you guys to keep increasing your shares, keep reinvesting dividends, keep making it grow. Because over time, you get a lot of this passive income that will make more and more passive income as well. The goal for next year, dividend goal, I want to get to $205 a month in dividends. We should get about $190 a month this year. If this grows and I'm going to add more contributions, it gets about $205 a month. That's what the goal is. It's a reasonable goal. It's not insane. I think it's possible. All I have to do is about $100 a month in KBWI, my ETF getting about 7% in dividends. We're a little bit low in international right now. I have only about 25% in international. So I would have to put a little bit more, about $175 a month in VEA to balance asset allocations. And if I get that and reinvest those dividends, that should get to the $205 a month. I did the calculations on that in my head as well. A lot of math here, but just want you guys to realize dividends, when it grows into passive income. The passive income will grow more passive income over time. And this is not a get-rich-quick scheme. We're looking at decades here. But over time, if you start early, you're going to be growing your money quite a bit. This was the dividends that I received for the year. January, February, I only had quarterly dividends. So that's why I had to wait until March. After March, I decided to slowly buy some monthly dividend payers right here. Biggest month of the year was in June. I got $517.58. These are more monthlies. Notice in August I made over 100 for the month. Right here. This was the first month, and every month after that I made over 100 a month. And that's the main goal of my portfolio, to get over 100 a month in dividends. September was a quarterly, so a bit higher. October I made some income from YouTube. So I put that back in as my passive income right here. November was still over 100. And the last month was $351.57. If you add up all those numbers, I got almost to $2,000, $1,973.20. That is the total amount of dividends I made last year. I know I'm getting a dividend in about a few days in RYLD. It's a covered call ETF. And that'll be $40.65. If I add these two up, I do get over $2,000. However, based on my accounting methods, since I didn't get paid this yet, I'm going to put it under January instead. So 1973, some of you guys might be born around there. I was born in 1981, pretty close to it, but pretty good goal that I was able to get very close to $2,000 a year in dividends. Okay. Any other general thoughts you might have on dividend growth, how these numbers might work? I'd like to, if you want to share me your links to your videos and how much dividends you made, and if you have any advice or questions that you have, feel free to let me know. Like, subscribe, all that good stuff like everyone tries to pitch, and have a good one, guys.